Good morning, everybody, and welcome. My name is Phil Parzial, and I'd like to thank everybody for joining us for a presentation on specialty mortgage products at Nationwide Equities. We refer to these loans as our SOS product line because they were originally designed to bail out hard-to-qualify clients. Over the past few years, we've been able to make a name for ourselves by closing difficult loans that other lenders haven't been able to, either because they didn't have the necessary programs or they weren't applying common sense underwriting guidelines. I know most realtors already have mortgage companies that they're commonly working with, but I hope that after this presentation you're willing to give Nationwide a chance, especially with your more difficult to qualify clients. We understand that your client's experience will not only reflect upon us, but also on you since you referred them. We want to make this home purchase as quick and as painless to that borrower as possible. That way, we're both able to make sure we're able to capture any of that client's future business. As I mentioned earlier, my name is Phil Parzial. I started in the mortgage industry back in 1996 as a real estate attorney representing buyers and sellers. From there, I began to represent lenders and eventually opened my own mortgage company. I've been at Nationwide Equities for about the last 10 years, and I'm currently employed as their COO and General Counsel. I'll be joined today by our Director of Support Services, Tiffany Rains. Good morning, Tiffany.
Thank you, Phil, for the introduction, and good morning. I've also been in the mortgage industry for over 15 years, working in many different roles with a focus on underwriting and underwriting management. With my past experience and my role here at Nationwide, I'm fully equipped to pre-qualify your borrowers so their loans go smoothly.
Before we get into the SOS program, there's a few things I do want to let you know about the company. We are a direct lender, and we have been in business for over 20 years. Even though we do have some broker products available, we underwrite and close everything in-house. The company's been in business for over 20 years, so we survived the ups and downs of the industry. The two principals have been in the business together for over 40 years. We also understand the difference between the refinance work and realtor referrals. We know that you need that loan closed by a specific closing date, and to get that done, we actually track every milestone. If there's any issues or anything like that, management actually gets a report saying, appraisal wasn't done within 3 days, disclosures weren't done within 3 days. Whatever that milestone is for that topic, underwrite hasn't been completed in less than 48 hours. We know about it so we can address it immediately. We want to make sure that when that closing date comes around, you've had the CD already issued, there's no question, you know that borrower is going to close that day, and you know that that wire is going to be at the table. Also, to help realtors, we actually designed our own realtor support help desk. It's a help desk designed just for realtors that's actually manned by not only me and Tiffany, but there's also 2 DE underwriters on that help desk. There's a dedicated help desk person, and there's also a loan officer. So if there's any questions there, you're going to be able to get somebody. Even though our main topic of conversation today is the SOS program, I do want to let everybody know that we offer a complete suite of traditional mortgage products. These range from your more common conventional and FHA programs to your less common HECM for purchase, and even our own specialty reverse mortgage product called Equity Power.
As Phil mentioned, Nationwide is your one-stop shop for borrowers of all capacities. We have your conventional financing, which also has options for home-ready and home-possible loans that cater to borrowers with lower income and reduced mortgage insurance, so they can put 3, 5, 10% down and have a lower overall payment. Fannie and Freddie Mac also recently increased their DTI threshold, allowing some borrowers the ability to qualify with over 49% debt-to-income ratio. We offer FHA financing, which is probably your most popular type of financing, as it gives borrowers with lower FICOs and higher DTIs the ability to put less funds down and still become homeowners. FHA also has an excellent renovation loan. Not sure if everybody knows about it. I'm sure you do, but it's a very untapped market, and I feel it could be so much more utilized. It gives borrowers the ability to get into a home and renovate it to become their dream home. So if you have that borrower out there who's super picky and hasn't found the home that they like, maybe you want to show them a home that's a fixer-upper and have them look at it, tell them that they can renovate the whole thing and make it become the home that they've always dreamed of. We also offer VA financing here at Nationwide. These loans are for your veterans and active military borrowers. They allow them to do 100% financing, and there's many times where the DTI options are much higher and we still get approvals. There's no monthly MI, and some of these borrowers are even eligible for no funding fee. USDA loans. This is another government financing that we offer here at Nationwide. I'm not sure how many of you are familiar with USDA loans, but they are a government loan backed by the Rural Housing Development. And when most people think of USDA loans, they think of rural, they think of farms, they think of lots of acres, but that's not always the case. As you can see, this property here in Cocoa, Florida actually falls within USDA financing property eligibility. And it's another good product for those borrowers with lower income, lower FICO, and you can do 100% financing with the USDA loan. So it's a cross between FHA and VA, but not geared towards your military borrowers. So it is, in fact, open to everyone. So if you're unsure of a property, if it's located in a USDA designated area, you can ask our realtor support and we can check the address for you. It's also a great way to maybe market a property that you're currently listing. Again, we can check it for you, or we can give you the website to check it yourself. And if it falls into a rural housing designated area, then you can market towards these types of borrowers. So it's a really great product.
Over the past 10 years, Nationwide has been one of the top reverse mortgage lenders in the entire country. Despite closing thousands of reverse mortgage loans, however, one product that we feel has been severely underutilized is the HECM for Purchase. The HECM for Purchase is perfect for your borrowers 62 years of age and older who either don't want to tie up all their cash when they buy a home or want to avoid paying a monthly mortgage payment. Another advantage of this program is that it can significantly increase your borrower's buying program while still keeping more of their money in their pocket. This next slide is a perfect example of what I just spoke about and is based on an actual borrower that Nationwide closed. Our borrower had just sold his house in New York and was looking to downsize and move down to Florida. Based on how much money he received from the sale of his home and how much money he wanted to have remaining to live off of, our borrower decided to buy a house for $175,000. Unfortunately for our client, he wasn't able to find anything close to what he was looking for at that price range. At that point, his realtor put him in touch with one of our loan officers in Florida, and after reviewing his file, not only was our borrower able to afford a house that cost over $125,000 more, he still had no monthly mortgage payment, and he was able to keep more money in his pocket from the sale of his home. In addition to traditional HECMs, Nationwide also offers our own reverse mortgage product called Equity Power. Equity Power takes the basics from a typical HECM loan, but adds several unique advantages that make it much more attractive to your typical borrower. The most significant changes for purchases are going to be that we'll allow loan amounts up to $4 million. If you have a condo that appraises at $500,000, we don't need an FHA approval. And finally, unlike a HECM that goes down to age 62, our Equity Power product will actually go down to age 60. When you consider that we have 10,000 people turning age 60 on a daily basis, you can see how the Equity Power product can greatly increase your pool of potential buyers over a traditional HECM loan.
And now for the highlight of our presentation, Nationwide's niche products, the SOS loan or non-QM loan program. These products are truly one of the things that sets Nationwide apart from other lenders. There's quite a few ways to qualify borrowers that might not fit into the traditional financing box, and there's even an option for unwarrantable condos on a case-by-case basis. I know there are many condo communities in Florida, so keep that in mind as we go through the highlights of these non-QM programs. The bank statement loan is probably one of my favorite of the non-QM SOS loan products. It's perfect for your self-employed borrowers. As most of us know, the self-employed borrower normally writes off a majority of their income on their tax returns, leaving them with a very low net yearly income. And that gives them a hard time at trying to purchase a home that they're really looking for because they don't qualify traditionally. With the bank statement loans, we can take their net deposits, usually over 3 months, 12 months, or 24 months, coupled with a P&L, and off of their deposits, we can qualify them for something usually with a much higher value, giving them the ability to really get themselves into that dream home.
As I mentioned earlier, all the examples we're using today are actually based on real-life borrowers. The slide in front of you actually represents a borrower that represents something that I can relate to personally because I went through the same exact situation about 10 years ago. Back then, when the real estate market was starting to get slow and I was a real estate attorney, I decided to prepay some expenses and move up some depreciation. What ended up happening was the next year when I applied for a mortgage, I didn't qualify. Even though the firm had grossed over $200,000, my net pay was less than $50,000. When I applied for a loan through a traditional bank, they didn't care what the reason was for the decrease in net income. The only solution at the time was to find a co-borrower. To make things even more complicated, the bank wanted me to add that co-borrower onto the title of the home. If that exact same scenario happened today, I would have been able to qualify without a co-borrower by just using my bank statements, and I would have been able to close within 30 days.
Next up, we have our real estate investor loan. This loan requires no income to qualify. How many loans can say that? With our SOS real estate investor loan, all your borrower needs to qualify is for the rental income to equal or exceed the mortgage payment on the home he or she is purchasing. We can even close in an LLC and a corporation. So I'm sure you're all thinking about that real estate investor client that you have that's looking to make their next investment property purchase. But with a loan like this, what we would do for qualification on this loan is to analyze the rental income in the area. Your borrower would just need reserves, and then we would be able to close their next investment property purchase. What's better than that? We actually just closed a loan like this for a real estate investor. He purchased his 5th investment property, and we were able to get the deal done for him using a lot less points and fees. His last loan, he went hard money. The points and fees were really high, and he was, unhappy. And in this loan, we didn't have to use his tax returns to qualify him. He was able to qualify with the real estate investor loan just using the rental income. He was a very happy customer, and I know he'll be coming back to us for his 6th investment property purchase. The next SOS loan program that we offer is geared towards our foreign nationals. In case you're wondering exactly what makes somebody a foreign national, they are a non-resident alien that is not authorized to live or work in the U.S. or that has a work visa that is more indicative of a temporary residence. The foreign nationals are considered to have a primary residence in the country of their origin. So we consider these as second homes or investment properties for these borrowers. And we can do bank statement, full doc, or the investment property loan for them. And they don't even need U.S. Social Security number or a credit score. So we can qualify them off a foreign credit or non-traditional credit. So if you know a borrower that you think might fit this scenario, give our real estate support an email or a call, and we'd love to help see if we can qualify them.
I had this slide made up for this presentation because it shows a partial list of borrowers that we were able to help that were turned down by other lenders. The list includes a lot of things we've gone over already, but it also includes such things as past bankruptcies, recent foreclosures, and borrowers that had just finished up a short sale. We like to think that there's a home for every loan, and we notice that a lot of our competitors will turn down a loan, not because it can't be done, but because they don't offer a product that meets that borrower's needs. One thing you'll always hear from the management at Nationwide is if we don't service our customers, somebody else will. To that end, we offer a dedicated live help desk for all our realtors. When you call the help desk, you'll have someone who's available there to review loan scenarios, help structure your loan, and help answer any questions you may have about any products. As part of our dedication to service, we always like to stress communication. If you can't get your loan officer on the phone, there's going to be a processor there is available to answer any questions. And even if that processor is not available, there will be somebody there at that help desk who can get you a status on your loan. One of the things that got us our reputation as being a company that can close hard-to-place loans is our policy that no underwriter has the authority to deny a loan. Before a loan can be denied, it has to be reviewed by our senior loan committee. At that time, not only will the committee look to see if there's any other alternatives for that borrower, they're also going to check and make sure that that underwriter used common sense principles when underwriting that loan. We like to think we know the difference between an investor guideline and what's a hard and fast underwriting rule, and we've noticed that by using common sense and being reasonable, that we're able to give a lot of borrowers exceptions. Before we wrap up, I'd just like to say thank you to everybody for joining us. I'd like to encourage everybody to use the Realtor Help Desk, either by using the number you see on your screen or by emailing us. I also invite everybody to check out the Realtor support page on our website. On that website, you'll find loan scenario forms, marketing material, and general product information. Again, thank you for joining us, and we look forward to hearing from you.